So today I want to talk to you about something that's worrying me. I think we're getting what some people are calling a mini bubble in crypto, particularly Bitcoin and even some other altcoins. So what I really want to focus on today is what I'm calling an overextension of Bitcoin. And maybe I should just tell you from the start, I think this is happening because of Operation Choke Point 2.0. Basically, I thought it was a conspiracy theory, but like Elon Musk, I guess it was Elon Musk that said this, that all conspiracies are true until you find the hidden strings, the levers that are pulling on this. And it seems like this conspiracy is true. There's been nearly 1 dozen lawsuits, mostly from the SEC, but also from the CFTC on Binance, even Coinbase. I mean, so these are the biggest brokerages out there. And there was a new lawsuit today on on the Bo crypto exchange, Bo something. I've never heard of them. But the point is, the SEC and the government is attacking crypto from all points. They're getting the exchanges, attacking the stable coins, they're attacking individual projects. So this is a very, very intense attack. And so because of that, Bitcoin is becoming almost like a safe haven asset. And so what I want to talk to you about is what I see as an overextension. And what we're going to see is a bleed. And I'll talk to you about that later. But first, I want to talk to you about the overall crypto market. And then we're going to drill down. So let me minimize myself. So the first thing I'm going to show you is from CoinMarketCap. Everyone uses CoinMarketCap. So I want to show you this. This is a bit of a different chart. Usually they show you the rankings. What I'm going to show you here, I'm showing you the overall crypto market cap, and we're about $1.2 trillion, which sounds large, but in terms of asset classes, it's actually quite small. If you look at gold, gold is over $8 trillion, I believe. If you look at precious metals, we're talking about $10 trillion, platinum, palladium, silver, gold. And then people argue what's considered gold. We're looking at like Rolex. So this is not a Rolex watch, but are we looking at jewelry? Are we looking at gold that's just owned by the central banks? So we're not talking about a large market cap here. So here, again, we're talking about today $1.2 trillion market cap, up about 3 to 4% in just one day. So something's going on here. So let's look at the heat map. And if you look at the heat map, you could see it's a sea of green. And Bitcoin's was up 5% this morning. Now I'm looking at it's up 3.5%. Let's see, is this refreshed? Let me just try and refresh it. Now it's up 4%. You can see right here. And if we click on it, you can get a chart. And it says here, the technical score is very bullish, whatever that means. I don't trust these things. And if you look here, and this is from TradingView. Everyone uses TradingView. You can see it's done really well. And I'm going to go back to year to date. And you can see it's gone up dramatically. There was a bottom here around 19,000 something, 19,800. And then it almost went up parabolically. It's incredible. But if you look at my past videos, and I'm going to click on them later, but I just want to show you something. If you go back 1 year, you could see there's a huge amount of resistance right at this level and at this level. And if you recall, we had the Terra Luna crisis, and we had back in November, we had the FTX Alameda scandal and bankruptcy. So we've had some major events that have caused some overhead resistance. So it's going to be very difficult to stay above the 28,000 level where we are now. So I think we could go to 30,000. And here's what I want to talk about in my videos. If you look at my playlist on Technical Tuesdays, I mentioned that I was bearish in February of 2023. Basically, recently, I started to get bearish again. And then I was bullish back in, I think it was December when the market started weakening. I started getting bullish. I can't seem to find it now. Maybe it's this one here. Yeah, right here. I started getting bullish when I was looking for that January effect to continue. So this is December when the market started to get weak. My indicators started to get bullish, both sentiment and equity and crypto. They started to get bullish. But whether I was bullish in this area or I was bearish over here, I had the same placeholder for Bitcoin. I really thought that Bitcoin was going to have problems getting over this area here around 21,000, 22,000. And I said, if it got over that area, there's no way it's going to get over this area where we are now. I think there's way too much overhead resistance. Everyone is going to want to sell that lost money during the Terra Luna crisis and during the FTX Alameda bankruptcy. So I think we have an overheated Bitcoin. And fundamentally, I think we're getting overheated because of what I said earlier. There's been about a dozen lawsuits, and I'm trying to think of which ones they are. There was one against Binance and Paxos, and then that's from the SEC, and then from the CFTC against Binance in terms of futures trading, derivatives trading, and then there's an SEC lawsuit against Coinbase for selling unregistered securities, but we don't know what the exact lawsuit of that is because what they did is send a Wells notice, which means there's an impending SEC lawsuit. So we don't know the details, but I think it's related, like I said, to selling unregistered securities, number one, and number two, to the staking at Coinbase. Why do I say that? Because recently Coinbase, as of 2 weeks ago, they stopped doing staking services for Algorand. And the second reason I think they're going to go over after staking is because they went after staking services that were leveraged. And I think that's Lido. I think they went over after Lido staking. So that's the problem. I think the government is going after crypto from every which way. So when you go after crypto from all points of view, from all manners, what happens is investors, they want to stay in crypto, but what they do is they go to where they think it's safer. Well, since Bitcoin has been said to be a commodity, right, from the CFTC and from the SEC, so because they're saying that Bitcoin is a commodity, investors feel safe. They feel like they could get the returns of crypto without worrying about all that regulatory risk. So that I think that's what's going on. So I don't know how long that's going to last, but I think the big up movement in altcoins is not going to last. So I'm really worried, and I think we're going to get what's called bleeding. And bleeding refers to Bitcoin dominance. And I like that word because bleeding is a slow process. And I think that's what we're going to get. But before we go there, I want to give you one example of what we're talking about with altcoins doing really well. If you look here at Algorand is up 18% today. And it's up because of this news here, that the Algorand Foundation is branching out to India. But what I want you to note is here, this is labeled as a policy newsfeed, and I really like that label because if you think of Algorand, if anyone knows Algorand, this is a project that's very policy / governmental / university oriented. We all know Sylvia McCallie teaches at MIT, is very close to governments. So the reason I'm saying this is because the 18% move up in Algorand is not lining up with the news. This is like almost like a nothing burger. This is like long-term secular news, good news for Algorand, but it's policy news. It's going to take a long time to play out. So let's see what the news is. Let's go down here. I'll highlight it for you. It says here, we will certainly engage with regulators this year, and we know how fast regulators move. And And this guy used to be an advisor for India at the U.S. Treasury. And then he says, when we do talk to regulators, we will come back because we have a track record of working with the National Bank of Italy and the Marshall Islands CBD DC project. So Algorand, as I said, they're working with governments and they're working particularly with central bank digital currencies. And just to recall, India was in position of banning. I'm reading this paraphrasing this paragraph. Basically, India was totally against crypto, but now they're like, maybe we should adopt crypto, but levy some big taxes on it. And remember, Cosmos, the Atom coin, and Polygon are both based out of India. So it's in the interest of India to be somewhat supportive of crypto. And that's what I want to show you, that was it. Maybe there's one more line here. Well, it says the Algorand's India plan is broken up into 3 pillars. Broaden the Web3 developer base through education at events and universities. There you go. There's the word university that I used before. So basically, this is like a long-term news story from Coinbase, I should say, from CoinDesk, I should say. So Algorand's doing really well. Here's a stock chart from TradeWeb. But to me, this is not a good stock chart. I should say chart. You could see here over the last month, it's made it what I'm calling an unsustainable move, and it's hitting, again, overhead resistance in the same way that Bitcoin's hitting overhead resistance. Now I want to talk to you about what I initially mentioned to you earlier, the Bitcoin dominance. What I'm going to do is talk to you about Bitcoin and Ethereum together, because Ethereum is rapidly, or maybe not so rapidly, becoming an institutional asset. So if you look at them together, you could see that their dominance is increasing. So what I want to show you is just going over, maybe I should just bring this up here so you can see this. So this date here is November 22nd. You could see that Bitcoin's dominance went from 38% to the more recent 46%, which is a huge increase. And Ethereum went from 18 to, well, it's been about the same. But I could see Ethereum going higher. And another way of looking at their dominance is just looking at where it says other dominance here. That was 44%, and now we're down to 35. So it's about 9 to 10% bleeding of altcoins. And I continue to expect this bleeding to occur because the foundation of crypto in terms of regulation is just not there. Institutional adoption is like going nowhere, and corporate adoption is, which surprises me, is disappearing fast. Just in the last week, Disney, Meta, meaning Facebook, and Microsoft, all 3 of them, these are 3 mega firms, mega corporations, announced that they're dropping their plans for the metaverse. And the metaverse isn't just, games and, virtual reality. It's also NFTs, which is a very big part of crypto. So I think there's a lot of resistance, not just in terms of charts or overhead resistance in terms of investors wanting to sell once crypto reaches a certain price. There's a lot of institutional and corporate and regulatory resistance. So I think, I hate to say this, that I think we're still in the bear market, and I think we're going to get a lot more bleeding of altcoins going forward until the stock market, my friends, bottoms. And I don't think that's going to happen until later in the year, maybe as late as September and October, because the Federal Reserve is continuing to raise rates. And even if they're not raising rates, they're going to hold them. And just holding rates is a form of tightening. Why? Because even though there's been an influx of liquidity supporting the banks, we also saw what happened with Silicon Valley Bank and Silvergate and First Republic and even Charles Schwab's in the news, and Signature Bank. So there's a lot of support from the Treasury and Federal Reserve of banks. So even though there's support, the problem is that banks are tightening their lending standards. And when they tighten lending standards, that's a form of quantitative tightening. So again, even if the Fed raises and holds, what's going to happen is that the banks themselves are going to be doing the work for the Fed. So I think it's going to be a pretty tough period going forward until at least September and October of this year. So that's all for today. I hope you like this. If you do like it, please remember to subscribe and like below. Take care, my friends. Bye-bye.